S&P threatening to downgrade America's AAA credit. We are effectively on the brink of losing our status as the world's only technically risk-free investment. Why does nobody care? Hans pointed out that yields not only fell back down after the initial spike yesterday, but ended the day lower.
Well, good morning, Eric. And I think the market does care. I think that it is a meaningful and significant issue. But there are many shorts in the marketplace already. The market is anticipating the end of QE2, and so the marketplace is all set up for a rising yield market. And yesterday's warning shot from S&P is another good indication that the market is technically short. And so we can't look at the implications in one day. I think that's pretty misguided, and hopefully we don't set policy for one-day market moves, but we have to look at over a trend. This clearly is an indication of a bad trend. It's something that should not be a surprise. You know, when we have deficits going from $400 billion to $1 and $1.4 trillion, it's a negative trend, and that trend is why I think S&P has put us on credit watch. They're basically saying we cannot live with these deficits of this large scale.
A lot of people have been expecting one of the credit rating agencies to come out with an announcement like this for some time. Does it feel to you, though, like they're perhaps getting a little more aggressive? We've talked for so many years about credit rating agencies being a lagging indicator. It happened in Europe. S&P, or neither S&P nor Moody's, woke us up to the real threat of sovereign contagion in Europe. Is this a little more of a preemptive strike?
Well, I think there's been so much criticism directed at the rating agencies for, as you said, missing the subprime and other problems associated with structured finance. The rating agencies have been actually a good indicator in corporate credits. And I think they've ramped up their position as to how they actually act and what is considered responsible. And I think what they did is a preemptive indication. It was not a downgrade, it was a warning. And we have to take that as a warning, not as a downgrade. We've been, you know, there have been other times when we had a negative watch. I think the last time was when we had all the fighting in Washington related to the debt ceiling in the mid-90s. And so this is not the first time it happened. It's basically asking Washington to be responsible.